Hello, hello. Make sure the audio is good. All right, guys, we are rolling. Happy Sunday. Hope you guys are doing well. Hope you guys had a phenomenal weekend. As you guys know, it's Sunday, new week, new opportunities. So we'll go ahead and cover usual intermarket analysis, dollar, bonds, and stock averages. I will take some questions as well. You guys usually have me take a look at a few additional markets, and I'll be happy to do that today in the Q&A portion once I wrap up with my analysis here. So with that, guys, we do have non-farm payroll protocol this week. So as always, my colleague that handles the blog posts, we have those every Sunday. They're released at 8 o'clock. So you guys will also have that for your edification as well. Understanding the economic calendar, how to take advantage of it, knowing where the opportunities will be, knowing where the difficulties also going to be, also earnings reports and other important factors that all traders need to be aware of, not only if you trade stock index futures, which is what we primarily focus on, but again, the skill set is wide ranging. You know how to trade any one market, you can trade every market. So with that, guys, we'll go ahead and get right into this one. Jesm, hello, hello. Zen, hello. Let's learn something new. Absolutely. Looking forward to sharing. Jared, hello from Frankfurt. Awesome. Shout out to Frankfurt. Where's everyone tuning in from today? Chris, all good. Thank you, sir. Jared, audio and pictures fine. Thank you. Ahmed, hope you are well. Long live Nasdaq. Long live Nasdaq. Yes, sir. Man, volatility on Nasdaq's been relatively clean so far this year. So especially going into April, May, expecting much more volatility to come, especially looking at the world events right now. Again, that'll kick off a lot of volatility in the markets as well. Hello from Casavo. Nice. Matthew, Dylan, I'll be in St. Petersburg tomorrow. If you want to hang in the PM, happy Sunday. Sounds good, Matthew. We'll be in touch, brother. Let's look to make something happen. St. Pete's not too far from me, and I know some good places to hang out in St. Pete. So yeah, let me know. We'll be in touch, Matthew, for sure, brother. Mr. Noller, yes, sir. Let's go. Let's do it. Julian, hello, hello. Adrian, hello. Hope you're doing well. Chris, glad to have you back. Thanks for joining us. Mr. Garrison, hello, hello, sir. Frank, glad to have you. Nevada, nice, Kyle. Reno. Med London, all right, UK, good deal. Iran, Ireland, South Africa, awesome. Tuning in from all over. Good to see. Oluwale, happy Sunday, brother. All right, guys, let's go ahead and get right into this one. RC, UK, Islam, hello. All right, guys. Looking at the DXY, let's go up into the monthly chart. So as you guys know, we have been bullish dollar for the past 2 months, looking for higher prices. A lot of factors that are involved with it from a technical standpoint, but also on the fundamental side, which is covered extensively in the weekly write-ups that my team writes. So we have been monitoring, obviously, the COT reports on dollar, and that has been bullish. Obviously, that's not enough for me to feel enough confidence or conviction the market's going to go higher. That in addition to the technical analysis, understanding how to read market structure, institutional order flow, it's a really helpful tool. So also keep in mind that the COT remains net long for commercials for the dollar. But again, my team covers that extensively in the weekly reports that we cover, right? So there's also a matter of fundamentals that are considered in what we do. But again, they're going to be additional confirmation tools with what we'd already be looking for, which we have been calling dollar higher. So what does that mean for foreign currency? And indices have not been trading as cleanly with currency. So we haven't been seeing as much of a clean risk on, risk off scenario this year, which has been trading relatively more difficult because we don't have that typical market symmetry that we'd want to see in high probability. Nonetheless, markets are still moving. So even though dollar and indices aren't moving as synchronized as I would like them to move, still, again, opportunity nonetheless. But looking for higher prices, still looking for lower foreign currency, and indices, we'll touch on that when we get to them. So monthly candle called the expansion higher. We expect open, low, high, close. Because we still haven't reached targets yet, I'm still going to want to see this candle close near the high. There's no reason to expect like a TGIF on the monthly candle. Well, Dylan, TGIF is only a weekly setup. What are you talking about? The monthly candle. Well, TGIF, if it does apply to the monthly candle, it applies to the daily candle, the weekly candle, hourly candles. but again, within obviously the right understanding. So I use that tool that ICT made available with TGIF. You can use that to know where the daily range is going to close, where the obviously the weekly range, as he taught it, monthly range. So it's not just limited to that, but using that context as to I'm still expecting higher prices on the monthly candle, because nothing with where we're at would constitute a reversal if we're going to trade up into these highs. And we'll further confirm that with the bond market as we usually do. So still looking for higher prices on the monthly chart. Want to see a strong close on this monthly candle, open the next one, and continue expanding higher. All right, weekly chart, again, underlyingly bullish market really for the entire year outside of retracing into this short-term discount. And then from there, we've displaced higher. This inefficiency here, we were looking at this as we were trading here. I indicated to you guys that I wanted to see it left open, right? If it's left open, that would indicate it's a breakaway gap in my analysis. And that would, again, allow me to trust that it's going to be a bullish market, right? And that's what we've been seeing. So this inefficiency here on the weekly chart, and that was a key level that I shared with you guys last week that I would be watching. And again, if I'm watching a key inefficiency, there's the same constant levels I'm looking at, and it's giving me the same feedback, right? So if I'm bullish, if I want to see this market get into these highs and trade higher, which I am expecting, I would want to see it supported in this fair value gap. Luckily, with what we do, it's not as ambiguous. Like I know there's other methodologies that use zones, and when you're looking at a zone, what key levels do you use? How do you know? Because it's just a big random range of price action. Well, luckily with what we do, yes, we have these ranges in price, but we're able to refine them to very specific price points that the algorithm will refer to. So the fact that we traded down, made the low of the week at the midpoint of this inefficiency, that's not an accident, right? So the market's trading down, offering this fair value gap, and then we know that a fractal of a fair value gap, if it's trading into this fair value gap on the weekly chart, on the daily chart, what's it going to be? Sell side liquidity. So not only is it rebalancing in efficiency, it's also trading into short-term sell stops. So seeing how we traded up off this key level is indicating to me the market's still bullish. So I'll be looking for a weekly expansion higher going into the coming week, running out this buy side liquidity pool going into this week for non-farm payroll. Yeah, all right. Wanted to make sure I covered everything I wanted to. All right, so still looking at this longer term price swing here. I'm still expecting this to be a market maker model, or a market maker buy model to be specific, and I want to see us get above this original consolidation in here. So what I'd like to see is for the market to reaccumulate inside this daily fair value gap as we have, and then from here expand higher, take out the relatively equal highs here and the buy side here. So we traded into the long-term target we had, which was this inefficiency, and then we retraced, which is reasonable, right? We had a huge range expansion higher. It's a huge range expansion higher, and then we've reached targets, right? So when we see that, it's reasonable to expect the market to retrace, right? Where did I tell you we can retrace it, or how far would it be reasonable for me to expect it to retrace? This daily fair value gap. So we traded into it. Yes, the wicks color outside the lines, but that's permissible. We have to allow that in our analysis. So seeing the bodies being respected inside this daily fair value gap, trading higher, violating this candle's opening price, I'm going to treat this as a bullish order block. So I'm going to want to see the market find support inside this down close candle, expand higher into these equal highs here, and the buy side up here. So ICT bullish order block, expecting the market to not need to get down below that, right? So if my bias is bullish, what would invalidate that? Getting through this down close candle, right? So what I'm expecting, but what also invalidates the idea. And then if we violate this down close candle, then we're likely going to trade down into this inefficiency, which I don't favor. Again, I want to see this one left open and want to see the market reprice to these stops here in a hurry. All right, yeah, that's it for the daily chart. All right, moving right along into the hourly. So still in the relative range, trading down into the daily fair value gap. From here, they left relatively equal lows on Friday. They traded down into those lows, and then they aggressively repriced away from it. So sell stops taken in a discount and then displacing away. Let me see if... was looking at whether or not there was an SMT divergence between euro and pound. There wasn't. But still, taking out the sell stops equal lows, and then we displace away from it. So looking at this hourly fair value gap here, this is going to be an influential level for my trading going into this week. If we're going to get up into these equal highs here, then I want to see us find support inside this hourly fair value gap. So that's the draw. If we violate the hourly fair value gap to the downside and we displace through this daily fair value gap here, then I'm no longer bullish and my daily bullish bias has been invalidated. So looking for higher prices unless we violate these levels here on the downside. And then if and when that occurs, then I'll have to shift my analysis. And as always, I'll like to update you guys, always in the Discord, but in the Telegram group as well. So that's the expectations moving forward for dollar 4 hour. Yeah, so for 4 hour, you can even make the level even cleaner, and then you can just use this 4 hour fair value gap here instead of the hourly chart, which just gives a bit more detail. The draw remains these highs, 3 drives pattern, and then we displace to the upside. What additional insight that I'll give you on the daily chart is look at how we trade higher, right? The displacements higher are low resistance and easy expansions to the upside, right? Here and here. Look at how we trade down. So look at the sell side delivery in a buy program. What does that mean? In a buy program, the market's being repriced higher. Sell side delivery is when the market trades lower or offers downside price action. One of the things that helps me read institutional order flow is comparing buy side delivery versus the sell side delivery. So the buy side delivery here is extremely bullish. It's displacing this high here. There's no resistance getting through it, right? So it's a low resistance liquidity run through the highs. But look at when we're trading lower, right? It's slow, it's lethargic, it's a lot of back and forth to the downside. So what that gives me additional insight to into the order flow is that it's extremely bullish. It's having a hard time trading lower, and it's easily trading higher, just to put it into simple terms. And that's what helps me gauge the strength or weakness of the market. So seeing how we trade up easy, and then we trade down with more friction, with more restriction. That gives me insight that the institutional order flow is exceedingly bullish. All right, so that's it for dollar. Let's take a look at the bond market. All right, so T-bonds, as you guys know, we have been looking for lower prices. This weekly fair value gap has been the draw, and we stopped just short of that last week. So still looking for lower prices. We have had 4 consecutive weeks of downside delivery, so a little bit of a retracement would be reasonable. I'd have to permit that in my analysis, also considering that we're opening up a new monthly candle as well. So those are the factors I'm considering for the weekly chart. Daily chart, again, we've been seeing continuous bearish order flow. Hasn't invalidated anything in my bias to the downside. Still looking for lower prices. The order flow market structure remains bullish. We have this sell side liquidity pool here in the form of these equal lows that I'll expect the market to want to draw down into. And then we also have this large inefficiency that again is from the weekly chart. So as my downside objectives, as long as the order flow remains bearish, it has been relatively lethargic delivery, but again, delivery on all assets this year, 2024, hasn't been the greatest. Again, not to say there's not opportunity, there's not money to be made. It just hasn't been the cleanest delivery. And anyone that has been trading for any length of time, for the most part, would agree with that statement, I would think. So seeing that, yes, we're still delivering lower, but it is, again, just a lot of choppy, sloppy back and forth. But again, lower bonds has been giving me further confirmation to look for higher prices on dollar, right? So again, this is where all this ties together. So if you know where dollar is going, as a currency trader, it's a must. And then for indices, it just gives you an additional advantage in knowing where it's likely to go. So looking for lower on bonds. Let's go right into the yields. All right, so weekly chart for yields, we've been seeing higher expansion. Again, this is another additional confirmation, which has had me looking for higher dollar, right? Yields are higher. That's going to be bullish for the underlying currency. So we've been seeing power of 3, open, low, high, close, open, low, high, close, every single week expanding higher to the upside for yields. Again, giving me further confirmation to look for a risk off market scenario, which is dollar higher and risk assets lower. Still looking for higher prices moving forward. Nothing's changed. Let me get the arrow on here. Nothing's changed. Looking at the inefficiency here on the weekly chart, we traded deeper into that, which has been our target for some time. And now I'm going to want to see us trade to it and through it, and then reach for the external range buy side liquidity, right? If we zoom out on the weekly chart, we retraced into the dealing range. So from this low to this high, that's our range. Market traded down into a discount, traded to what internal range liquidity. So now I expect the external to be tagged out here. So with that understanding, that's further confirmation for bullish dollar. All right, zooming in on the daily chart, let's zoom in here. All right, so the order flow and institutional market structure remains bullish. So I'm still looking for higher prices as long as intermediate term lows are respected and down close candles and inefficiencies support price. And we're seeing that continuing on the yields. So again, nothing in my analysis would call for lower prices until we violate bullish order flow. So as long as we continue higher, I'm looking for higher yields to the upside, which is also going to provide lift on dollar. All right, moving right along. Looking at stock indices, we'll look at the monthly chart. All right, so for this monthly candle, we were expecting expansion to the downside into this inefficiency here and wanted to see if we could continue to accelerate to the downside. But what it has shown was a willingness to trade higher off its low. So what I'm going to want to see is, you guys see we have 2 days here until the monthly candle close. I'm going to want to see how we close. Again, that's going to give me insight as to what I'm going to be looking for moving forward. When markets are symmetrical, it does make it, how would I say, I guess more straightforward to relate dollar to indices. Typically, indices are trading higher, then that's going to give us risk on or risk off scenario, where indices are going to look to trade lower, right? But we haven't had that this year. So while yes, it's a huge component in my technical analysis, I have to use what the market's giving me. So what I'm seeing right now is we traded down in this monthly fair value gap. I'm going to want to see how this candle closes. If we close bullishly, then that would put me neutral to bullish on the monthly chart. But again, luckily with top-down analysis, we can refine this throughout the time frames. So looking at the monthly chart, here, we are showing support at this monthly fair value gap. Like I said, we will close in 2 days though, and I'm going to want to see how we close. So that's going to be Monday and Tuesday's trading. All right, weekly chart. So we have had 3 consecutive weeks of downside expansion for S&P, so it's reasonable to see the market retrace. So last week we had an inside week, which just means we stayed in between the previous week's low and the previous week's high, and we stayed within that range. So with that in mind, we do have a small fair value gap here. I'm still favoring lower prices in this market based off what I'm seeing in the dollar index. However, I will have that confirmed with how we trade inside this weekly fair value gap. So as of right now on indices, I'm neutral. I'm going to want to see how we trade inside this weekly fair value gap here for S&P, which isn't a big one, but it's still going to be a key level that the algorithm will absolutely refer to. On NQ, the inefficiency is a bit more pronounced. So going into this week, I'm neutral, and I'm going to want to see how we trade inside that weekly fair value gap. And then how we trade there is going to tell me what I need to know. And I'll show you guys what that will look like in the lower time frame. So watching this weekly inefficiency here, and then if we trade up through that, we have these 2 up close candles as an upside target as well. And then how we trade there will be influential. Do we hit these levels and sell off, or do we trade to them and through them and keep repricing higher? Right. So those are the factors that I'm going to be weighing out going into this week. All right, daily chart, a lot of key levels of me. Clean this up. All right, so we had a range expansion lower to the downside. So after expansion, we get retracement or potential reversal. So what I'm looking at here is we traded from discount to premium. We traded into the equilibrium, but also the fair value gap, right? So we've traded into a short-term premium. So what I'm going to want to see again is how we trade here inside the short-term premium. Do we displace and break down aggressively, or do we keep putting in bullish market structure to the upside, right? So I'm going to want to see how we trade there, and that's going to give me the insight I need moving forward. And I'll further confirm that with the dollar as well. All right, one moment. Let me get the fan on in here. All right, so as I said, daily dealing range. We're inside the fair value gap and 50% equilibrium. I'm going to want to see how the market's going to trade here. Again, the market, if it's going to be bearish, will show its hand from here. Or if it's going to be bullish, it'll indicate that in here as well. So I'm going to wait for that insight. If it's going to be bearish, I'll see this as we've traded into a short-term premium of this dealing range high to low, trade into fair value, and then see the market trade from internal back to the external range liquidity here. And that's what I'm favoring based off seeing bullish dollar. But again, how we trade here is going to determine that moving forward. All right, so on the hourly chart, as you guys know, my higher time frame bias for indices has been bearish. However, if you'll recall what I said last week, we already dropped a lot, right? So we dropped a lot last week. While yes, I'm bearish, markets don't go straight down or straight up, right? They have periods of retracement. So what I told you guys I'd be looking for to know if the market's going to retrace is you just go down a time frame. You go into the hourly chart. What did the hourly chart show us last week on Sunday? Well, we opened with a gap higher, and then it did what it found support in that gap. It was unable to get down below it. So seeing that we found support inside that new week opening gap, we took the sell stops and displaced higher. Well, what's that telling me about the order flow? It's bullish on the hourly chart. So I'm not going to go in and try to impose my will and short a market that's going higher just because my bias is bearish. So what I'll do is I'll trade the underlying order flow. So while I did get a nice short here on Monday into that new week opening gap and traded that, that gave me a short setup for that day. But after it started showing bullish market structure, I had to get in line with that. And then once I started seeing that bullish order flow, I could see where the market would reach for, right? These equal highs here and these equal highs here, right? So it's a matter of adapting. So just because, again, my macro analysis is bearish, right? Monthly, weekly, markets just don't go straight down. So how do I know when's it going to retrace? When's it going to keep going lower? Well, the market structure in the lower time frame will tell me what I need to know, right? So we traded up into that short-term premium, and then we broke down, shifted market structure, and then we gave a nice price leg lower Wednesday into Thursday. Failed to keep accelerating down to the downside. They took it higher, and now we're still in the middle of the range. So as long as you remain in the middle of the range for S&P, and again, what do I mean by middle of the range? From low to high, we have equilibrium, right? So we're at 50%. So whenever markets are at 50% of the dealing range or equilibrium, it makes it relatively difficult to frame out an analysis. So what I want to see is us displace away from equilibrium. Upside or the downside, it doesn't matter, right? As traders, we make money up, we make money down. We don't really care which way it goes. So what I'm going to want to see is where we displace away from at equilibrium here on the daily chart, or on the daily fair value gap inside this key level on the daily chart. All right, so I believe that's it for ES. So again, if we do start to break down, we have all these relatively equal lows here and here, and then we have the external range liquidity here after retracing up into a premium, right? So if this is that weekly fair value gap or the daily fair value gap, and I say I want to see how we trade here, what does that really mean, right? So we had that weekly fair value gap here, and I'll show you this example, or the daily fair value gap, excuse me. We traded up into that level. If it's going to be bearish, how would it indicate it's bearish? It's going to displace away from it, and then it's likely going to shift market structure. Once that happens, we're going to expect every swing higher to be a failure swing or to be a suspect rally, because it's done what? It's traded to its premium. It's broke down, indicating it's not going higher. So each swing we're anticipating being a failure to the downside. So if it shows me those signatures here, that is what I mean when I say I want to see how we trade at these key levels. If we do what? Like displace to the upside, and we don't show any willingness to trade lower, then I'll have to get in line with that, and I'll keep you guys updated each step of the way as we get more information going into this week. Mr. Rogers, good day. Good day. Hope you're doing well. All right, let's go to NQ. Jay, internal range liquidity to external range liquidity on ES daily. Yes, that's a possibility I'm looking for, Jay. But like I said, I'll have to see that confirmed in the lower time frames and see how we trade inside those key levels. And then that'll give me the insight as to whether or not that's what we're going to see materialize for this week, Jay. Yeah. All right, monthly chart for NQ. We'll go through this one a bit quicker since I already covered ES relatively deeply. So looking at Nasdaq monthly chart, we expanded lower into this monthly inefficiency here. And then again, we've traded higher off it. Like I said, monthly candle is going to close here in about 2 days. I want to see how we close, right? Do we close more bullishly, or do we start to show more heaviness Monday going into Tuesday's trading? All right, weekly chart, we've had 4 consecutive weeks of lower prices on the weekly chart, and we've reached several key discount targets, right? From this discount low to high, we traded into a discount and hit the bullish order block. So it's reasonable to see that market retrace, right? Even though my macro analysis is bearish, like I said, markets don't go straight up and straight down. And I'm also, if you listen closely, also sharing how I'm able to determine when do we retrace, right? When's it going to keep selling off, and how I use the lower time frames to map out those specific signatures. So weekly inefficiency here above market price, I'm going to want to see how we trade there. This is going to be influential for me going forward the next 2 to 3 months in my trading. How we trade here will be important, right? Do we hit this level, break down, like I would show you in the hourly chart, right? Trade up, run buy stops, shift market structure, and break down. That would be bearish in here. But what if we don't do that? What if it just trades up through it, displaces through it, and keeps rallying? Well, then I would look for higher prices, right? So it's a matter of weighing out that information, and that's what I'm going to be doing going into next week's trading. But again, this weekly inefficiency will be influential, and how we trade there is going to determine where I'm expecting us to go for the next couple months. All right, daily chart. So again, we got the expansion in the week prior to the previous week, and then we saw a retracement in the last week. So from high to low, we've retraced to a short-term premium. Inefficiencies here have been repriced into. The key level I was watching on Friday while I was live with you guys was this opening price of the daily bullish order block. And I wanted to see how we traded there, right? Because as of right now, the order flow is bullish, short-term, right? Small inefficiency here. Look at the body respecting it, and the weekly fair value gap, constant encroachment, beautiful precision. And then we trade higher. Down close candle, we trade into it. It does what? It finds support there and trades higher. So that's not a bearish market for right now. So again, markets can enter short-term buy programs and sell programs within the context of expansion, retracement, and how all that comes together. So what I'm looking at right now, as long as you remain above this bullish order block, we're looking for higher prices into this daily fair value gap. We also have this breaker here. So high, higher high, the lowest down close is that breaker. So if we continue on the upside for Nasdaq, we have the daily fair value gap and this bearish breaker. I'm going to want to see how we trade there. And then if we, again, show the signatures that would constitute lower prices, then that would tell me what I need to know. If we trade to it and through it, then that would indicate to me, okay, we're going higher, and then I'll look for the buy side here. So it's not, again, I'm not calling both sides of the marketplace, but I'm sharing what factors I would weigh out, what would invalidate my bias, and what would confirm my bias, which is all part of a complete pre-market analysis, which you do want to have, right? When you're going into your trading, you don't want to not have a game plan, right? You don't want to have no idea what you're going to do, what you're going to execute on. So this is why this is so helpful for myself, my team. This is what brings us our success in our trading, right? A high level of organization, knowing why we're doing something, right? Does it make sense to do it? And then when you start to factor in discipline, good money management, risk management with elite top tier analysis, you have a lot of opportunity available to you. So that's what we're making available here to you guys on the YouTube. And again, it helps set the tone for the week. Know what you're looking for, and more importantly, why you're looking for it. And that's all part of the confidence that people that do trading at a high level that they have. And again, they have a process and they have a protocol. So I hope this is insightful to you guys in that way as well. So looking at this daily fair value gap, those would be the key levels that I'm going to be watching moving forward. So moving right along into the hourly chart. So again, same thing as I shared on E-mini S&P, right? We opened last week, but what was the order flow early in the week? It was bullish market structure, bullish order flow. So that's what told me not to short, right? Because the market was reaching higher. So I had to do what? Reverse my analysis or my bias and look for higher prices. So I was trading long Tuesday. I was going long on Tuesday, but the bias was bearish. But I'm showing you guys here, by contrast, how am I able to switch gears? How do I know when the market's telling me it's not going lower, right? And it's based off the hourly chart. So hourly chart indicating bullish market structure. We trade up into a short-term premium. We hit that daily fair value gap, and then what do we do from there? We trade higher, clear out the buy stops here. So buy stops have been taken out, and then they break it down, and we get a shift in market structure. From there, we trade up, bearish order block breaks down, and we trade into a discount. And that gave a nice price run short to trade Wednesday into Thursday, right? And that's the thing with my analysis, right? If I'm bearish, all I need is one price leg that week to bank, one price leg in the direction of my analysis, and that makes me everything I need for an entire week. I don't need to trade a whole lot. There's a whole lot of setups as a scalper, but if you just want the best, again, cream of the crop setups, they're going to be in line with higher time frame analysis. So looking at this here, yes, it did give lower prices after trading into a premium. Yes, we closed the week higher, but if I'm closing out a scalp lower and it's profitable, then the analysis was helpful, was advantageous. It made you money that week, right? So that's the key. It's not as important to get caught up in right or wrong, or for example, well, you said the weekly candle was bearish, and it wasn't. And it wasn't. It actually closed higher than where we opened. But again, markets just don't go straight down or straight up. And again, the bias every day is both ways, right? Bulls can make money and bears can make money. It's just about knowing what you're looking for, what your specific model and process is for you. And then once you're able to identify that, then you'll be able to go in here and find your consistent income in these markets. So looking at Nasdaq hourly chart, the order flow remains bullish and the market structure as well. And they both go hand in hand. So looking at these relatively equal highs here, as long as the order flow does remain bullish, meaning we stay above this intermediate term low. This is the key low in my analysis. So as long as we stay above that, I'll be looking for these highs here and that daily fair value gap. How we trade there is going to be influential. So some factors I'll be weighing out. If we see strength in dollar and we see Nasdaq trade up into its respective premium, it'll be interesting to see, do we get a breakdown from here and start to accelerate to these equal lows down here? That's what I'm going to be weighing out going into this week. But again, that's going to have to be confirmed with how we trade there. So I'm going to want to see how we trade at these key levels here in a premium. And then that'll indicate everything that we need to know to have our game plan solidified going into the month of May and even June. So that's the analysis for this week. Yeah, so the flip side of the coin would be, and this is the last thing, if we trade up into here and we don't break down, right? Let's say we trade up here and then we just keep displacing higher and we keep showing bullish order flow and bullish market structure. Well, then I'll keep looking for higher prices, right? So it's a matter of being able to weigh those factors out. Right now, the draw is these equal highs and this daily inefficiency. Again, how we trade there will tell me what I need to know moving forward. So I'm neutral to bearish on the higher time frame for stock indices. Chris, just press the like button. Thank you, Chris. Much appreciated, sir. And that's my reminder to remind you guys to please hit the like button. Helps us out greatly for all the value we're providing you guys here on our Sunday evening. So I hope you guys enjoyed the analysis. Hope it was insightful. I will go ahead and get to you guys' questions if you have any. Julian, hourly market maker buy model on the Nasdaq. Yes, sir. So there's many fractal market maker models that are occurring, all day long, higher and lower. So this here could be a fractal market maker buy model, right? Original consolidation, we attack it. But if you go up to like a 4-hour chart, well, now this could be like a parent market maker buy model here into this original consolidation. It's just a matter of knowing what you're looking for, how those factors come together, and understanding the fractal nature of the market. So what could be higher time frame market maker model could be a lower time frame sell model that's just the buy side of the curve. So there's a lot of different nuances to understanding market maker models. But yeah, absolutely. And it just really depends on what fractal you're looking at. Julian. So hopefully that makes sense there for you, Julian. Got my squeezing out the green tea. It says on the box, it's how you get the extra goodness out. Capital Trader, good. Thank you. Future handles, do you have any insights on order pairing? Handles, could you define order pairing? Do you mean in the sense of market efficiency paradigm? In the sense that the market trades higher for buy stops, for smart money to sell to those buy stops and then trade down to sell stops and to distribute their profitable position? You mean in that sense of the market efficiency paradigm? That's the only context I would understand order pairing in. Yeah, absolutely. Future handles. So that's really at the core of everything I'm doing. everything I'm doing in my trading, and you can even ask my private mentorship group that's also right here with you guys in the audience. Everything I'm doing in my trading absolutely relates to market efficiency paradigm and order pairing. Every time I'm going long, I'm waiting for retail to get stopped out of their shorts or of their longs. We take their long position, and the market's going to trade higher and distribute that position to buy stops. Let me just show you an example here on Friday. Again, market does this every day. So if you study this, you have plenty of examples, and this is something that I absolutely is at the core of every single trade I'm taking. No trade I take does not have these factors in it. So at the root and the most important thing in my trading is actually that understanding of order pairing. And whenever I'm teaching training, that is always going to be the highest level of understanding, because that's what gives you narrative around what the market's doing, right? So if it's going to be bullish, we trade down, we hit that daily bullish order block here on Nasdaq. This is Friday's trading, and it's doing what? Well, there's equal lows here and here. What's that? That's sell stops. Just going to dig into those sell stops for the purpose of what? Who knows to buy a discount early in the day if it's going to be repriced higher, right? So the point of what I'm saying there is that it's going to offer that discount at a specific time of day, because smart money knows to pair their orders at those specific times. So if smart money is buying down here because there's sell stops here, here, and here, each time it's running sell side liquidity, what's it doing? It's offering smart money new entries to buy those sell stops. So smart money's buying, logically, where would they distribute their long positions if they're buying down here and they're looking at this daily bullish order block? And then they buy this here. Well, they're going to look to distribute it to willing sellers at a high price. Yeah, I said that wrong. Because if you understand what's occurring here, right? When the market creates a high here and drops off, creates a high here and drops off, people are doing what? They're betting on it going lower. So if they're betting on it going lower, they have a short position. How do you protect a short position? You put a buy stop on it. Where's that buy stop going to be? Here and here. So what's that already engineering? It's engineering buyers at an expensive price. So there's willing buyers that want to buy it at a very expensive price relative to where it's at. So if there's people willing to buy it, smart money has to do what to close out their long positions? They have to sell it. If you buy something, where do you want to sell it? Obviously, you want to sell it for a higher price, right? So if you're buying that discount like smart money is, they're buying the sell stops here. So traders that are expecting it to go higher prematurely, they're getting stopped out. 9:30 Judah swing right on schedule. Smart money's buying that for the purpose of order pairing to distribute it to the buy stops. And if you understand what I just explained there at a deep level, you have what it takes to trade algorithmic price theory, and you have the understanding needed to do this, because it's the fundamentally everything I'm doing is going to be rooted in this logic, and everything that I'm doing in my trading will be absolutely rooted in that understanding there. So a little review there on market efficiency paradigm. Purple rectangle, it's a daily fair value gap. So the ghost, the daily fair value gap, that's this one here. So the daily candle of April 17th, extend that inefficiency through. And if you look at it in the lower time frames, there's a lot of magic in that as well. So not real magic, but in the lower time frames, you'll be able to see specific insights around those key levels to gauge order flow. Yeah, great question though, Futures. Absolutely. So yeah, that order pairing, if you study that logic there, that'll be there every day in the markets. And then if you start to study that repeatedly, you'll start to see that there actually is a repeating logic that's highly linked to time of day and the price where it's already likely to reach for. Matt, hey Dylan, oil looks like AMD. Let's take a look at crude oil. Let's look at the higher time frame. So interesting close here on crude. So I was looking at the monthly chart here for crude oil. We have been in a bit of a range here for some time on crude on the monthly chart, and the range I'm talking about is low to high. So that's why, there as scalpers, there's trading, but whenever we're in a range like this, it just creates more unfavorable conditions. So what I was watching here on the monthly chart was I want to see crude oil leave this range, right? So we traded up into this up close candle. I wanted to see if we could trade to it and through it on the monthly chart. It has been unable to do so. So what I'm seeing here is where this candle's at right now. we were unable to get above this monthly bearish order block. So seeing that the body's staying below that, that's something I'm watching. So this candle will close in a couple of days. The monthly candle close on oil will be influential. So I want to watch that moving forward. Weekly chart, we have been expanding to the upside for some time. We reached a premium of this range. We hit this last up close candle here, opening price almost perfectly. And then the market retraced into its inefficiency. And did it hit the last down close? Yeah. And then trading, I think, just short of the order block, and now it's showing a willingness to expand higher. So what I'm going to want to watch moving forward on the weekly chart for crude oil is, do we show willingness to expand higher? So we traded down, we hit the discount order block, and now it's showing a little bit of a willingness to rally. So if we keep rallying on the upside, we have the buy side here and here for crude oil. If we hit this up close candle and we fail to get through it, and then we start to see a rotation lower, then that wouldn't be as bullish. All right, so daily chart, nice thing is we were fine through the time frames, we're able to simplify the analysis. So daily chart, key level I'm going to be watching will be this daily fair value gap here. And I believe I shared this level with you guys last week. This is going to be influential for me. If we are not able to get above this, I shared we'll likely trade into those lows. If we do get above it and we close above it, then we're likely going to keep going higher. So everything for me is going to hinge on how we trade inside this fair value gap. And I believe I shared that with you guys last week, but we just stayed in that range. So crude oil is not really moving a lot. And especially with what's going on around the world right now, when crude oil is going to move is when we have, how do I want to say that? Is when we have developments in geopolitical events, right? So either escalation of war, de-escalation of war, all those news drivers, updates with regard to that, crude oil is going to be highly sensitive to. And if you think about it, it makes sense, right? The military industrial complex, think of the hundreds of thousands of gallons of crude oil that it needs to do that, right? So crude oil prices are highly dependent on what's going on geopolitically, right? So war is extremely bullish for crude oil because of the demand it creates for oil. So there are real fundamental factors behind this. So I want you guys to understand why I'm saying it's going to be important to monitor what's going on geopolitically to know what crude oil is going to do, because it's going to be highly driven based off those events. Capital Trader, how are you using the COT data? Well, I use it as an additional, my team uses it as an additional tool to gauge where we believe the market's going to go. In and of itself, as I've said many times in the past, it's not something that I use as a standalone indicator or tool. In addition to what I'm already looking for, it's extremely helpful. So that's, I guess, how I would use COT data. Julian, thanks, Dylan. Absolutely. Mahmood, any signs on NQ for quarterly shift? Yes, sir. Mahmood, where you been, brother? Yes, sir. We've already looked for the quarterly shift here before this week expanded into these levels here. So after we got that big run there, more patient, Mahmood, and now I'm just looking for this retracement, and I'm going to want to see how we trade in this retracement. So yes, we did anticipate the quarterly shift here to attack these lows here. And now that we attack those lows, I'm going to want to see how we trade inside this range moving forward. And then how we trade here is going to give me directional clarity longer term. And then that would hopefully give you the answer that you're looking for in terms of quarterly shifts. I'm sure you're looking for my analysis 2 to 3 months ahead. And like I said, how we trade inside that weekly is going to be influential 2 to 3 months ahead, Mahmood. Futures handles, yes. All right, hopefully I covered your question there. Futures handles, thank you. Yeah, okay, good deal. RC, how do we sign up for the newsletter? So the newsletter, you can do that through the website. Link should be in the description below. Salem, FOMC this week should be interesting. Absolutely. Cobra, what days are you going to trade next week? You'll have to find out in the newsletter. So we'll have that there and we'll cover all that. So not to take the thunder away from our newsletter, where we do cover the economic calendar and again, how we use that information. Sufi trading, hopefully I'm not saying it right. Might be a dumb question. No such thing as a dumb question, only an unanswered one. But what do we look for? What do we look at bonds for? I understand that we look at dollar since it's the opposite of NQ and DS, but what are bonds for? Great question. Yeah. So bonds are helpful in understanding where the dollar is going. So some insight that you'll be able to take away from this is that the bonds directly relate to what the dollar is doing. So, right, if you think, like you said, dollar influences indices, right? Well, what influences dollar? The bond market. So if you understand the bond market, that's the real supply and demand for the dollar, right? Because as yields go higher, what happens for dollar? There's more demand for dollar because there's more yield for that dollar, so people want to buy dollars. So on a fundamental understanding, that's what's going on. And you'll be able to look at, I'm sure, Investopedia, investing.com, there's quite a few. They should have some resources for you to get you up to speed with that. But yeah, just understand how the bond market relates to its respective currency. And then if you understand that, then that'll give you the clarity we need. So what it does is it gives me basically 3D X-ray vision into the markets. And it allows me to know what I'm looking for in dollar and further confirm that with other assets. Jay, if bearish this week should be important, as if we reject the weekly CIBI or the OB, we should go down and not come up again, correct? Yeah, if it's going to sell off, it should hit these premium levels and drop like a rock. If it doesn't do that, then that's going to give me additional insight in and of itself. Correct, Jay. Super Trading, thank you. Appreciate the explanation. Absolutely. Salem, ICT live streaming next week as well. Oh, I didn't know that. Awesome. Some insights from the man himself, Mr. ICT. Good deal. All right, Chris, when it's a week with so many news like next week, how do you trade? So because it is non-farm payroll protocol, I'm looking to get paid Monday going into Tuesday. If I have to go Wednesday morning, actually Wednesday morning's FOMC. So yeah, Monday, Tuesday, I'm looking to get paid. And I can trade after non-farm payroll hits the wires at 8:30. So really only 3 trading days that I'd focus on non-farm payroll, and that's Monday, Tuesday, and Friday. And you can even trade FOMC after the release if you're experienced and you want to ride that roller coaster, but you just have to know what you're doing, and you can absolutely trade those events. Not before, obviously. That wouldn't be very responsible, but you can trade them after. My protocol, Monday, Tuesday, and Friday. Much more details on that, like I said, in the newsletter. Julio, hey Dylan, is seasonality also in line? I've noticed DXY looking more bullish than the average last 30 years. Absolutely. So we do have seasonal factors that are also in alignment right now. Seasonal tendencies for dollar is bullish around this time, and seasonal tendencies for indices are bearish. So when we have our mentorship call, Julio, on Tuesday, and then throughout this month as we go into macro analysis, I'll touch on seasonal tendencies. I'll bring my seasonal tendencies charts, what it is I use, and how I'm able to map out all those factors. So yeah, absolutely. But to answer your question specifically, definitely looking at bullish seasonal tendency for dollar, and seeing the market structure is further confirming that it should absolutely be repriced higher. And then you're saying it's looking more bullish than the average the last 30 years. Yeah, that's interesting, Julia. Yeah, that's an interesting point. But yeah, that's how I would go about using that, Julia. Malik, what is your bias this week? That is the first 30 minutes of the YouTube stream, brother. So we'll have that recording up for you, and you can see what my bias is on all markets. Chris, thank you for your answer. Absolutely. All right, guys. So questions winding down. Hope this one was insightful. That's going to be it for me. I got some lesson plans to get through and other administrative stuff to get handled before I get into the week. So, all right, guys, that's going to be it for me on this one. No more questions. Let me check my Discord real quick. Matthew, see your question in the Elite channel. I'll go ahead and get to that. All right, guys, that's going to be it for me. Hope this one was insightful. Chris, you have a great Sunday as well. Have a great rest of your evening, everyone. Good luck and good trading, and stay safe, guys. Take care. Have an excellent rest of your week. Oh, one more question from Ralph. Couldn't pass this question up. Do you get losing streaks sometimes? Absolutely. Absolutely. Every profitable trader, I'll go and answer your question here, Ralph. Every consistently profitable trader absolutely goes into losing streaks. Even the best of the best have losing trades. 2, 3, 4, even 5 losing trades are possible as a consistently profitable trader. So absolutely. Yeah, that question was too good to pass up. So yeah, definitely, Ralph. And if anyone says they don't go into losing streaks, they're not making real money trading. Trust me. So you guys take care. That's going to be it for me, guys. Have an excellent rest of your evening, guys. Take care, everyone. See you, Jay. See you, Islam. Jair, take care.